I know you're kind of a technician here, Oliver. When you look at the cattle and the hog markets as they are right now, what are you watching for anyway?
Well, the December live cattle contract, 151.77.5 was the August highs. Above that, the April highs, 152.17 to 152.37. And we're lingering pretty darn close to that, but aren't really able to get any follow-through momentum above this pocket. A breakout and above could spur some momentum buying from the funds, and there's really not a whole lot of significant resistance above there. So that's what we're keeping a close eye on. From a risk-reward standpoint, we like selling at the upper end of the range, especially with the cash market doing what it's done recently, which is basically nothing. It's been mostly a stick in the mud, so we wouldn't be surprised to see live cattle maybe peel off a little bit. There's some support near the 50-day moving average at 149.30. The other thing we're keeping a close eye on is the U.S. economy. We're a little bit concerned about that going forward and what that may mean for the consumer. And that may mean consumers are looking for maybe a cheaper protein alternative going forward if the Fed continues to raise rates at the rate that they're going.
What if they do raise the interest rate 100 points this week? Do you see that as a negative mark here on the meat market?
I think that would put a lot of pressure on the equity markets, and that would spill over into kind of a risk off in the commodity space as well. So, as I'd mentioned in the grain segment, 75 basis points is the expectation right now, but 1 full point is not ruled out at this point.
All right. Are you fairly secure we can hang on to cash prices or not this week?
I think a lot of it's going to depend on the outside markets. I think that we continue to linger near 142, 143, but if the outside markets start to roll over, I think that might put a little bit of dent in the cash market going forward.
All right.